All right, Ken Range Theory Trader back with you with another trade recap on a trade I took today on the daily Ken Range Theory. I know I haven't traded the daily chart in a while, but I figured why not, especially with the risk management model that I'm really starting to employ, that I'm enjoying with trading other people's money. If you don't know what I'm talking about when I say that, look at the video that has that title. But very short and sweet video for today. What we had here was a Monday, Tuesday, Wednesday candle range theory long on GJ. I mean, just a simple textbook pattern. The only thing with trading the daily chart is that the trades will take longer to play out. However, it did play out. So simply stated, yesterday, this is what I saw. Let me see if it'll let me go back there like that. So what we had here was the range candle. Hope it'll. No, I don't want to show it. Okay, well, this candle here didn't exist yet. So I just saw this manipulation candle went below the daily low and closed inside of a daily fair value gap. So I was expecting just, a long candle to displace outside of this fair value gap and just expand to the upside. Now, the pound did have news today. So I think it was at 2 a.m. So that did drive the price down. So anyone who went long there might have had a tough time for a little bit. But let's drop down to the 5 minute and see our best entry. And I got out of this way too early. I got out at the daily open price. But let me see here. When you're trading the daily candle, one of your most important price levels is going to be the daily open. You expect for price to fool or just trap everyone below the daily open and then move into your direction. So here's the daily open price right here for today, which is Wednesday. This was the news right here at 2 a.m. Eastern Standard Time. So yeah, I just drove down and just stopped out everybody back here who was going long. And then you had railroad tracks off of the candle range low from yesterday's low right there. That was at 305. So at 310, I mean, it would have been, you could have entered there. That would have been like in terms of entry models, like a CRT low entry model where you're expecting price to stay inside the range, which it did. I look for a change in state of delivery for my entry. If you don't know what that is, be sure to check out the entry models video for that. But I think it was a change in state of delivery. Yeah, right here. So this price action here made the low, and then price closed above it. So you expect the low of the day to hold, and then just price to go straight up in a straight line. So it did, and it's still going even now. But that's the reason why I took this trade. So it's a very simple CRT pattern off the low of yesterday, and then change state of delivery. I believe took price bullish, and that was it. So I mean, from here, like I said, I got out of the daily open from my entry, which was right here at around 450. That was about 40 pips, but had I held, I mean, it went over 111 pips. Now, the good part about trading the daily chart is that you can get more risk to reward, but like I said, the trade does take longer to play out because, like I said, this was a around a 4:45, 5 a.m. entry, and you're talking about an 11 a.m. exit or so. But risk to reward would have been off the train, just a very good one. But ultimately, though, that was the trade setup. Just a simple daily candle range theory out of a daily fair value gap. So there's really not much else to it. Let me get rid of these drawings here so you can see it a little clearly. Okay, but there you go. That's our basic price action. Simple three candle range theory out of a fair value gap. The main trick is though not getting caught up in this wick here. You want to go long, ideally somewhere near the range bottom. But all of them will not look like this. However, this is just how this one shook out, and being aware of news as well, because news was used as I'm just going to say a stop hunt to stop out anyone who may have had a direction right, and then eventually reverse and spike up. So when you do have a candle range theory long bias or short bias, you do expect this candle to flip because this candle was solid red, but then it's now solid green in line with our bias. So that's it. Hope that helps. Appreciate you watching and have a great rest of your day. Take care.